Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on the euro currency. We're going with our trading plan. Everything, well, it's going well by far. So price action in general shows the performance that we have discussed in our weekly report. So we said that will be some minor bullish reversal pattern that suggests upside pullback. And on the daily chart, we talked about 109 area approximately. This is, as you can see, confidence level. Trend here still stands bearish. In general, we are watching south on the year based on the fundamental background and in general on the price behavior that we see currently. Mostly suggests that we could see some deeper downside continuation right to the OP. But currently, we're mostly dealing with the pullback reaction on the COP targets. Our guard is tripled to buy, and this pattern itself suggests the 30% pullback of the whole pattern's body. It means that it should be somewhere 108.90, 30% here, but also this is a confidence resistance. So that's our potential area where we have discussed and agreed to consider possible taking the short position. That for those who trade on the daily. So here we're just watching and waiting when this retracement will be over and when the market will reach the confidence. Here we will try and we will make the first attempt to go short on euro currency. On the intraday chart, guys, the pattern that we have specified in our weekly report develops well. So you can see that the market moved back to the neckline, slightly has exceeded it. As you can see that here is a bit higher top compared to this one. And it tells that here market has formed bullish reversal swing, which suggests that some continuation here could happen. Now, the major task for us is to correctly estimate where market could stop and turn to the upside. There are some different levels exist for that. Speaking on the 4-hour time frame chart, here is two major things. First one is the reversal swing, because usually when market forms reversal swing, the retracement after the reversal swing usually stands 50% or greater. So 50%, 618 are two levels to keep an eye on. But at the same time, guys, take a look. Here my market is flirting with the MACD. Well, it suggests that here is the bullish grabber could be formed. It has not been formed yet, but that's the thing that you should keep an eye on, because if market will form grabber here, this candle or maybe the next one, that will be very important, and it could mean that market is ready to turn up, because grabber will be a significant pattern in the current environment. So we could see not as deep, let's call it right arm as it stands on the left arm. It could be smaller, and market could show the upward action earlier. So that's the two things that we should keep an eye on. First is the retracement based on reversal swing. Second is a possible grabber here. Why we're talking about the grabber? Because on the hourly chart, guys, level stands very close to each other. So take a look what we have. Currently we have this ABCD pattern. Now market hits COP agreement with the confidence support. Theoretically, that's the level where market also could start upward action. I consider action stands on this level currently. Next level will be OP, and it agrees with the 50%. That's the minimal requirement level from the harmonic swing point of view. It stands on 107.90 approximately. And next one, well, XOP 107.65, and take a look at it corresponds in symmetry to the bottom of the potential left arm. It's around this area. 618 level stands 107.77. So here's the 10 pips difference between them. That was it will be our ultimate level for retracement. So here is not simple task how to manage your position taking. If of course you are trading on intraday charts, if you consider taking the long position on the euro currency based on this pattern. Well, in the current circumstances, this is most probable level that could be hit. The chances that market will turn up are either from here or from this lowest level, well, stands approximately equal in a probability. So that level is most probable. This market could try to hit it. And you could act absolutely differently. So you could, for example, as we usually recommend, you could split your position in the parts and trying to take the position gradually on each level. For example, here's you could take the 30%, here's maybe 50 or 60, and here's the rest if market will drop here. You could wait for a specific level. You could set your position taken in relation to the possible grabber that could be formed here. If you as soon as you will see grabber, you're watching for a level where a market stands. For example, it will be at the 50%, starts to moving up, grabber is formed. In this case, you're taking the position. Or conservative approach, you just wait for the deepest levels the market could reach to form harmonic head and shoulders, and then just take the whole position around this level. One thing that you should avoid is to this kind of action. So you will see this collapse for the all levels. It means that no other any retracement will happen. The market's ready to go down, because don't forget that we stand in the bearish environment. Yes, we're watching for retracement, but well, retracement is a tricky thing when the context is bearish. It's good to stop and just market could reestablish downward action to the OP, because some reaction on the COPs already has happened. So we hope that will be clear pattern on the intraday charts, but it happens not always. So that's actually the risk. Well, that's our view on euro. We're still considering head and shoulders. Here's the levels that you could use for position taking. How you will manage your entry, that's choice is up to you. I have described all the possible ways how you could do this. And let's see what will happen. For the daily traders, we do nothing. We just wait when the market will be around 109 confidence, see what patterns will be formed there, and to consider, well, supposedly we will consider their attempt to go short. Well, that's our short-term trading plan that we have specified in the weekly report, and we're still going with it.